Hit it.
It's September 4th, 2020, episode 95. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome to the show Michael Batnick from Ritholtz Wealth Management. We learn how he came to become part of the team at Ritholtz, what clients should do in this new era of super low interest rates, and most importantly, what are the Raptors' chances of winning 2 in a row. Then Patrick practices his witchcraft in talking charts.
And then this week in trading history, we go back to the creation of the dollar and the treasury. We get to our WTF clip of the week, and to cap it all off with the top 3 things to watch next week. And Kevin, we might even drink some beers along the way. So stick around, everyone. We have got a great show. Let's just jump to our first interview.
Michael Batnick is the Director of Research at Ritholtz Wealth Management. Michael is a member of the investment committee and heads up the company's internal research efforts. He spends most of his time developing and implementing risk management and portfolio strategies for the firm's clients. Michael is the author of Big Mistakes, The Best Investors and Their Worst Investments. He is also the co-host of the Animal Spirits podcast. Joining us on the show right now is Michael Batnick. I've been looking forward to this for a long time. Welcome to the show.
Thank you for having me on at 4:15 on the Friday of Labor Day weekend. Who picked this time?
You were the one foolish.
I can't believe I said yes to this.
Well, you're a good sport, and we really appreciate it. For those who don't know you, just why don't you kind of walk us through who you are, what you do, and how you got here? Let's start with like where you work and what do you do?
Sure. So I'm one of the founding partners at Ritholtz Wealth Management. We're an RIA based in New York City, no longer working in New York City, of course, but we are national. We have people all over the country, and started that with my partners in 2012. And so we do, as some of the people listening to this know, that we do a lot of content. Some people are probably sick of it already. We have podcasts and blogs and YouTube and put our thoughts out, and some people like it, some people don't, and that's what we do.
I think it's terrific, and I actually really enjoy your content. It's light, it's different, it's new age, it's kind of it's made for the younger folks. So let's talk about how you got into the industry. First of all, where did you go to university? Where did you grow up, and
Sure.
Where did you go to university?
I grew up on Long Island, did not care about education growing up, was never motivated by grades. And I paid the price because when I did get to school, I went to the business school at Indiana University, but I wasn't ready. Mentally, emotionally, I just wasn't ready. I got kicked out because I think I got a 0.9 and then a 0.8 in my second semester. And okay. I just wasn't ready for school. I basically went there, never went to class. I lived in Indiana. I just didn't go to school there. So I came home for a year, did community college, and was allowed back in, but I was on academic probation, and I dropped calculus.
Who hasn't been on academic probation?
Exactly.
I know I have.
But I dropped calculus, which was a no-no, and so that was an automatic dismissal. So getting kicked out of the same school twice, that one stung a little bit. That one hurt. So I came home and I finished up at Queens College with a degree in economics. And I graduated in the fall, winter of 2008, which is a terrific time to be coming out of school. And I started, my first job was at an insurance company, which I thought I had no idea. I didn't know anything about anything. I thought that was a financial planning company, and I was super psyched to get into the industry. And I thought, no harm, no foul. Yeah, I fucked up. Sorry, my language.
No, it's okay. It's no problem.
Okay, I really paid the price for doing poorly in college, but I got a job. So no harm, no foul. Turns out that wasn't necessarily the case. As an insurance agent, I was paying rent to work there, believe it or not. I was paying rent for the space. I had no salary. I had no boss. I had no career path, no guidance. I was cold calling people in 2008. Okay. And everybody listening knows what was going on. I didn't really understand the gravity of what was going on, but I was calling people that didn't want to talk to me to sell them products that they didn't want to buy. And it was a really great experience. Obviously not. It was not a great experience. I did that for a year and a half. And the only reason why I did it for so long was because I didn't have any other options. The economy was in shambles, and I had no idea what I wanted to do with my life. And as luck often intervenes, I met an older gentleman who was a broker or an advisor at Wells Fargo. And for whatever reason, he just started sending me emails, forwarding me emails, Breakfast with Dave Rosenberg, and Ed Yardeni stuff. And this is probably early 2009. And I didn't really know what I was reading exactly, but I knew that it was interesting.
Right.
And I met one person who was like, just gave me some casual advice. He's like, just go do the CFA, be an analyst at a hedge fund. And I was like, oh, okay, that sounds pretty good. That's it. All I got to do is do this test. And of course, it didn't work out that way. So I left the insurance company, and I pursued the CFA. I couldn't get a job. Did that and still couldn't get a job. And anyway, I just got very lucky that one day at a train station, I walked past Josh Brown. Apparently, we grew up in the same town. Josh, I recognized Josh from CNBC, and he had been writing a blog called The Reform Broker and was writing about a lot of the same business practices that I saw at the insurance company. Not necessarily as nefarious, I guess, for lack of a better word, but just the same incentive-based compensation models.
Right.
And I thought that was really interesting. And so I started reading him and watching him, and he seemed to be making sense. And so when I saw him in the train station, I basically tackled him and begged him for a job, and that's how I got to where I am today.
Wow, that's great. So at this time, he's not at Ritholtz, right? Like he's on his, like he's
No,
working first.
Yeah, he and Barry actually started working together in late 2010. So it was very early. So they had been working, I guess, for maybe a year and a half, 2 years together at that point.
So you're like one of the fifth employee or something like that, or very low, like.
I was I mean, there was a sales assistant when I got there, and then I was like the fourth person, and I was just sort of hired as a utility person, just another set of hands. So
Terrific. Now, actually, I'm quite surprised that you have been so little of years in the business, because when I read your stuff, it's marked with a lot of wisdom. It feels to me like you've actually understand and have seen a lot of things. How did you come about being kind of so wise when it comes to the stock market?
I think I'm a boomer at heart. I'm bald, so I'm pretty old. So I was not one of these people. By the way, can you guys hear my son screaming?
No worries at all. This is no problem. Yeah.
Sorry about that.
We know we love kids, and it's always
apparently
keeps you young. Keeps you young.
It sounds like my wife said no. So I was not one of these people that grew up wanting to be in the stock market. Obviously, if I did, I would have taken my education a little bit more serious. But I am a beneficiary of one of these crazy, if you put $10,000 in Amazon stories. So my parents got divorced in 1996 or something like that. And my uncle told my mother to put $10,000 into this company called Celgene. Okay. And in 1996, with all the splits that happened, it was like at 6 cents, and I think the Celgene got bought by Bristol Myers for $150 a share, whatever it was. But anyway, so it went from 6 cents split adjusted up to $100. And right. My mother didn't have a pot to piss in. She was I guess what they call the secretary, and she passed in 2011, and she knew that she was going to die. She had cancer, and she knew that she wasn't going to live forever. And in 2009, as obviously everybody who's listening knows, the market got cut in half. Celgene got more than cut in half, and she knew that she was going to leave this money to myself, my brother, and my sister. And so I think going through that had some sort of effect on how I view risk and the emotional agony of, listen, she hit the lottery. And so that was definitely a formative experience for me in terms of how I view the market, how I view risk and reward.
Okay. So let's talk about the markets and what you're seeing right now. You wrote a great piece recently. It's called All Wrapped into One. And you talked about how over the past year we've experienced basically half a dozen, almost 10 different ages. You talked about the inequality of the Gilded Age, the election of 1896, the pandemic of 1918, the economy of 1929, the social movements of the 1960s, the stock market of 1987, the speculation of 1999, and finally the housing market of 2006. And you argue that this is actually all wrapped into 1 year this year. Why don't you walk us through all those different kind of eras and why you think the current year resembles them in some way.
All right, so I'll try and do this quickly. In the 1890s, that was the age of Rockefeller and Vanderbilt and Carnegie and all the wealth that they had and all the rot underneath, which is why it's called the Gilded Age, because it was really kind of fake. You had all this wealth at the top and all these people struggling at the bottom. And then that led to the election of 1896, which was incredibly contentious. It was William McKinley, the Republican, versus William Jennings Bryan, the Democrat turned populist, and all the social unrest that was festering under the surface. So, needless to say, we have that going on in spades, unfortunately, in this country. I can't remember, and I'm not that old, but it was, the us versus them, where whichever side you're on, obviously that's us, and the them is the other side, whichever side you're on. Then, of course, we have the pandemic, the worst global pandemic since 1918, which led to, I think for the first time ever, really the economy not slowing down or crashing, but just stopping. Just the economy was shut off. And so this led to, numbers and charts that were just, things we've never seen before. And not surprisingly, the market got ahead of this, fell 30% in 22 days, the fastest 30% decline that we've ever seen. And then we know what happened with the Fed and the Treasury and the policies that they put in place seemed to put a floor in the market. And then it stopped going down and it started going up, and it started going up a lot. And then you have somebody like Dave Portnoy come into the fold, enter the mainstream, and Robinhood and the quarantine, people couldn't leave their house, and the stimulus and the checks getting involved, and people had nothing to do but gamble on the stock market, and stocks were going up and up and up, so it worked. And then we had a trend that was already in place with new housing starts and home sales, and people my age were moving out of the city and settling down and having a family and buying homes. And this just sped that up. And of course, we have the horrible scenes going on with police brutality and the NBA players taking a stand. And so we've just got this insane cocktail. And to me, one of the implications is, if somebody told you the environment that we would be in, to the T, gave you all of the economic data, what would your reaction be as an investor if a genie came to you and said, this is going to be the lay of the land for the next 8 months? Probably you would at least go to cash, maybe if not outright short everything you can.
Right.
Buy puts, buy gold, whatever. And pretty much the exact opposite came to pass. So for me, this is another reminder of the need to be humble in the face of uncertainty, which is what the market always is, and have some sort of a philosophy. You don't necessarily need to have a scripted game plan where if the market does X, I'm going to do Y. But you have to have some sort of philosophy, because whenever the market goes haywire, as it did earlier in the year, and it does from time to time, you have to have something that you believe in to guide you. And that can be, it doesn't, whatever your strategy is, whether you're a trader or a gambler or speculator or a long-term investor or just buy and hold, you need to have something that you believe in.
So what do you believe in? Like, what do you think works over time, and what works for the majority of people, you think?
So it's really hard to speak in such big generalities. I think there's more wrong ways to invest than there are right ways. I think there's like a few right ways to invest. There's a lot of wrong ways to invest. And I think that the only way that somebody discovers what works for them is by trying. And that's why I think all this Robinhood stuff and traders, and I think it's terrific. Are a lot of them going to be irresponsible? Yeah, sure, of course. But when has that not been the case? But the earlier people get involved in the market, and the earlier they can discover for themselves who they are as investors, again, whether they just buy a target date fund and call it a day, or they're trading or swing trading or day trading or whatever, the only way to discover what works for you is to try. So I'm all for it. I don't necessarily think that there's a right way to invest. I think that it's very investor specific. I mean, I'll speak generally speaking. I think that index funds are a great tool for most investors. Right. Do I think that that's the only way to invest? No, but by no means.
Yeah. So, Michael, you're quite different in that most people on Wall Street are just shaking their heads and almost like cursing and yelling at the kids to get off their lawn with these Robinhood investors. And I love your attitude, like great, bring it on. They should get involved, and it's a new kind of era, and the more the better. Why do you think there's this pushback to them? And let's also include, let's just put the kind of poster boy of the Robinhood investors, which is David Portnoy. Why do you think there's such a feeling of hatred and animosity towards these new investors?
Yeah, I think there's a few things going on. First and foremost, everybody that's like shaking their head, we've all been young people at some point. I'm still a young person, but we all started somewhere, right? Like anybody that started, what you were Warren Buffett when you first started investing. Like give these kids a break. They're just trying to learn. So I think there's a few things going on. One is people have this memory of 1999, whether or not that they were alive and trading back then or not. They know the orgy of speculation that we saw in 1999, and people say they see it playing out again right now, and they say we've seen this movie before. So I think that they're just waiting for the party to end. I think that there's a lot of a big aspect of I don't know if jealousy is the right word, but maybe sour grapes, that either they missed the rally, they think this rally is bullshit, it's Fed induced, it's all speculative, whatever the case may be, and they're just waiting for it to pop. And I understand the anger because most people are benchmarked to the S&P 500, and that has been a tough bogey to beat. And if you're not at least equal weight to the big five, then you're underweight and you're not winning. And so I totally get the frustration from the professionals that this won't end well. And I don't necessarily disagree. So I understand where it's coming from. I just think it's a bit harsh.
I think it's harsh as well. And actually, I find Portnoy entertaining as hell. And yeah, let's face it, his definition of analysis is to buy stocks because they're splitting. So we have to be aware that he's not really an analyst. He's an entertainer, and we shouldn't forget that.
So the people that like get mad at him are really, really, really missing the point. In my opinion, he's sort of analogous to Andrew Dice Clay. He's playing a character, right?
That's a great way of explaining it.
Like he's incredibly charismatic and funny, and he knows exactly what he's doing. Like he's not trying to be Jim Cramer. He's an entertainer. So yeah.
Right. I've been a big fan of his pizza reviews for a long time, and I'm not from New York City. We're in Toronto, but you're there, or at least you're around there. Do you think he's on the marks when he does his pizza reviews? Like when you've seen them? Oh no, he's wrong. Like you think they're BS?
I've only been to two places that he rated highly that were pretty junky. So I take his pizza reviews with a grain of salt.
You take his pizza reviews as much as good as you do take his stock market reviews?
Pretty much.
Okay, so listen, I want to chat with you a little bit about the politics of your country and what's happening there, if you don't mind, and we'll keep it to how this might affect the market. Like, let's not worry about who's right and who's wrong. Let's just talk about what's happening and what this might mean for the market. So let's start with what do you think the market is priced in terms of which side will win, and what let's just start with that. What do you think the market is pricing in currently?
I have no idea, honestly. I look at the market every day and I don't get it. And I understand what's going on. I understand the fact that the big stocks are beneficiaries of COVID. And I understand that we're in a cap weighted world, and that the Marriotts and the Macy's of the world can, they're tiny. They don't move the market. But still, I'm looking at this run up and I'm just shaking my head. So I have no idea what the hell the market is priced in anymore. Honestly, I don't know. So I don't know that, and I don't subscribe to the fact that the stock market is a barometer of who is going to be the president.
Okay, fair enough. And do you think that let's just put it this way: do you think if Biden wins, that the stock market reacts?
Oh, it'll react.
Yeah, and I assume to the negative.
I have no idea, and I have no idea which way it will react and how long it'll last. So, like for example, we all remember what happened on the night of, was it November 11th, 2016?
That's right, when Trump won. Yeah.
Yeah, we all remember. Futures went limit down. Did they not?
Yeah, they were down all night, and I think they were down huge. But by the morning, they were. I think bonds were up for like four points, and by the end of the day, by the end of the morning, they were down.
I'm pretty sure the stock market was green the next day.
Yeah, no, you're absolutely right. Yeah.
So I think I don't know how you could be a market participant and see this on a day-to-day basis and think that there is some sort of signal here. Like
Yeah.
I don't see it, and maybe I'm missing it, but uh,
Well,
we've tried to find some sort of signal based on the incumbent winning, whichever party it is, and in my opinion, this is a giant waste of time.
okay, so you would argue that politics doesn't move the market. So what does move the market? Are you more interested in policy in terms of fiscal and monetary stimulus? Is that what you think is driving us right now?
So here's my whole thing. I don't think I know this might be heresy in your world. I don't think we know what moves the market. I think that the market drives the news. I don't think that news drives the market. So
Okay.
I'm not saying I'm definitely not saying nothing matters. I don't subscribe to that. I absolutely think that the economy matters and the trajectory matters and the growth rates matter, but I also think that expectations matter. And we never know what expectations are until after the fact. So I just don't like, why was the market down yesterday so much? Why was it up the previous 3 months? I think that we need these sort of neat narratives. And again, I'm not saying nothing matters. I just don't think we could really say for sure what moves the market on any given day or week.
Well, you kind of threw me for a loop there because I was going to ask you about whether you thought that SoftBank's buying of all those call options and them finally walking away is the end of this bull market in the tech stocks. But now you're telling me it doesn't matter.
Well, so listen, this is an interesting tweet I saw from Sentiment Trader. He said, so SoftBank, whatever, they were buying a ton of call options.
Right.
Sentiment Trader said the real story is that SoftBank is dwarfed by retail traders who spent $34 billion in call premiums in a month.
Wow, I did not realize that.
So that was pretty interesting. So yeah, listen, I'm not a nihilist. I'm not saying nothing matters. I just don't think that we can know for sure exactly what matters on any given day.
You're not going to come looking for our rugs? The rugs that pulled the room together?
Obviously, you're not a golfer.
Okay, so let's talk about some other things that I've heard you say. You said the other day that Amazon was the best stock of all time. Why do you feel that way?
I think, you know what's funny? I don't remember when I said that, but I do remember hearing. As soon as I said that, I remember like kind of catching myself and saying that's not actually true. It's not true, right? Amazon is not the best stock of all time, is it?
No, but it depends on how you define the best stock of all time.
So what was the question? I'm sorry.
So why do you feel that Amazon, let's say, is one of the best stocks of all time?
Oh, because it's $2 trillion. Because it's $2 trillion.
Right, but is there more to it than that? Is there something that I think at the time you and Josh were comparing? You were talking about Tesla versus Amazon, and I have my opinions about like the difference between Tesla and Amazon, and I'm obviously much more of an Amazon bull than I would be a Tesla bull. But I was just wondering what led you to say those comments.
Well, what I was just saying, just past performance. I have no opinion on this, on the future of Tesla versus Amazon. I'm just saying, like, empirically, quantitatively, Amazon is one of the best performing stocks of all time.
Oh, I see. It wasn't a kind of a judgment on Bezos versus Musk or anything like that.
No, I was just saying it just in terms of shareholder return. Like, that's all I was saying.
Oh, okay.
The Tesla stuff is obviously fascinating. I have no dog in that fight. I don't get it. Like, what would Tesla have to do to justify this valuation?
I know, it's crazy. I'd like to compare it to the Scott McNealy quote when he talks about the fact that Sun Microsystems in 1999 was trading at 10 times sales. And he says, for me, let's just get this right. For you to get your money back over the next 10 years, I would have to sell with a zero cost, pay no taxes, have no kind of employees. And he goes through all these things. And at the end of the day, he says, what were you guys thinking? And I feel like it's the same thing. That Tesla will be the Sun Microsystems of this cycle.
Yeah, I mean, the thing is though that, like, you might be right, and I guess I tend to agree. There was a great quote. Sometimes stocks discount not only the future but the hereafter. I forget who said that, and it seems like that's the case in Tesla. But have more smart people ever been wrong on one side of a stock?
It's unbelievable, isn't it? Like to me, I've never seen Chanos be so wrong, and I think he's one of the brightest, smartest guys out there.
And it's not just him. And people have been saying this since this was a $50 billion stock or a $50 billion company, and it went up 5x. Or I'm sorry, more than it went up almost 10x.
Yeah, no, it's huge. It's probably 5x in the last 5 months.
Yeah, so good luck taking the other side. But yeah, just in terms of, so it was trading at 1,400 times earnings, and obviously it's trading on projections of earnings, 10, 15 years into the future. But how much would they have to grow to justify that? And how could they do that in cars? They would have to, the battery would have to do such things that like invent a space that doesn't even exist yet. And maybe they will. I mean, I guess you can't rule it out.
That's right. So you're talking about Chanos, and I heard you talking about Klarman a little bit, during this podcast that I watched you and Josh shooting the shit about. What are the other investors that you really look at and say, that guy really understands things? I would like to be, XYZ portfolio manager. Who do you admire?
Yeah. I really don't, only because there's a ton of people who I love to read, but I think that persistent skill in the market is, I don't even know that I think it exists. Like, I think that there are people who have their day in the sun that are brilliant, but the world changes so frequently that I think it's really, really difficult to stay on top. And that's not just an opinion. I mean, we know that persistence of performance really comes and goes. Klarman, for example, said that this is one of the most dangerous times. That quote, I think, was from 2010.
Right.
It's because the world changes all the time, and I forget who said this, but people are often an expert on an earlier version of the world. So there's people who I love to read, but I don't. There's no portfolio managers that I say like, wow, I think that person really has it all figured out.
So do you think that the average investor can beat the market over time? Or that individuals can beat the market consistently over time? Or are you like an efficient market guy?
Well, there's a whole lot of space between all of those things that you just said. Can the average investor beat the market over time? Absolutely not. Not a chance in hell.
Right.
Can an individual investor beat the market? Absolutely. Like I said, my mom probably made a 15,000% return on her investment. So can it be done? Do people actually buy Amazon at 10,000 in 1997? Yes, it absolutely can be done.
But can you do it? Those were people that picked one stock and went for it and left it and rode it. Can an investor that's doing a strategy or actually buying and selling over time beat the market? You think?
Yes, I do think they.
So you think let's say a portfolio manager. Can a portfolio manager beat the market over time?
Of course.
No, like not just by luck, but like can they consistently over 3 decades beat it?
Yes.
Okay. And what do you think the skills are that required? Like why do you think most don't? And I know like that it's to some extent by the laws of average, people have to lose and there's fees and stuff like that. So I get that. But what do you think are the contributing factors that make the decide which ones are going to win and which ones are going to lose?
So what works in 1 year doesn't work in the next year, and same thing with decade. And I think that I just think that so like in terms of consistently, so over 30 years does not mean that you're going to consistently outperform. Because, for example, Vanguard did a study over a 15-year period, only 14% of mutual funds outperform their benchmark. Okay, so these are people that have all the resources in the world that dedicate their life to doing this. 86% failure rate over a 15-year period, and of the 14% that did outperform, 72% underperformed for 3 years in a row. So
right.
you don't need to win consistently to win over time. And Buffett and Munger said that like they prefer lumpy returns that are larger as opposed to just smooth returns. Smooth returns does not exist. That's made up. Nobody has smooth returns. So I think that let me be very clear. I think the chances of an individual investor who doesn't do this for a living, who has a job, who has a family, who is going to casually invest and beat the market is, I'm making up a number, 1 in 1,000.
Okay. It's low.
It's very low.
But you
It's
think,
very
but
low.
you think, but you think a professional investor can do it. But the constraints are, and the kind of the caveat being that they need to accept lumpy returns.
Yeah.
And most
So
clients don't accept lumpy returns, and often, like, if you're an institutional investor, I think that Jeremy Grantham has this great line where he says that I went and looked at how much, like, my returns over the years were X, and I beat the market by Y, and my Sharp was this, and it was a great chart. But when I looked at how much money I took out of the market, it was much lower than I expected because the clients took it away from me at the worst possible time.
yes,
So they gave them
exactly.
too much money at the
yep.
top, and they took away too much other things. And would you argue that that's the real problem that kind of holds professional investors back from being able to achieve it? That pressure from the clients?
I think we're all human beings, and whether or not we admit it, we all look at 3-year returns, and that's how a lot of decisions are made in the investment industry. So I just think I think it's really difficult, and I definitely subscribe to Michael Mauboussin's idea, and I know that he took it from somebody else, of the paradox of skill, that the less the dispersion of skill, so the greater the skill and the less dispersion between one smart person to the next, the more luck influences the outcome. And I think that's what's happening today, is that these people, these hedge funds and institutional investors that have all of the resources in the world, they are all so smart and they have so much data at their disposal. So it's really hard for one to consistently beat the other. It's like if you have a team of 5 LeBron James against 5 Kevin Durant's, there's not going to be persistency there. There's just not. Like, everybody is so skilled and so smart. So do I think that a professional investor that can only transact with retail investors would win 9 times out of 10? Yeah, I do. But the problem is they're not transacting with retail investors. Will only be in 2020 they are. They're transacting with other professional investors.
That's right. And there's only so much alpha to go around, and it's just more and more professional investors doing that. So let's. Sorry, go ahead. I'll let you finish.
One last thing on this topic. Just because I don't think that most people can outperform, by the way, that's not controversial, is it?
No, oh no. That's a very common held belief, and
yeah, I mean,
Professor Malkiel would say that nobody can outperform. And
yeah, well, I wouldn't go that far, but outperformance is hard, and of course it should be. Like the potential rewards for outperforming are massive. But let's just say that you mess around either by yourself, or you like picking stocks, or you like picking mutual funds, and let's say that you come close to the market. Say the market does 8 and you do 6.5. Okay, big deal. What's wrong with that?
Yeah, no, I agree. And I actually think that in some ways the retail investor actually has an advantage because they don't have the month to month. You talk about everyone's chasing 3-month returns. I would argue that a lot of mutual funds and hedge funds have performance on a monthly basis that they feel like they have to, achieve. And the investor can basically sit out things and can take more pain, whereas a professional investor can't be involved. Like you mentioned, the fact that all these stocks are going up, the Apples, the Facebooks, and all the big top 5, and the professional investors are getting killed. So they're in essence almost short and have to buy them. Whereas a retail investor can say, listen, I can take this pain. I'm going to sit it out. Just like you say, market's up 25% this year. I'm only up 15. So what? That's good enough.
No doubt. That's such a good point. If you were not in these high beta names, the Teladocs and Zooms of the world, all right, no big deal, right? Like, you missed it, so big deal. But as a professional, if you were not at least equal weight to the big 5, you're in big trouble. It's probably keeping you up at night. The individual investor that's not playing that game, they don't care. What's the difference?
Yeah. No, you're absolutely right. So listen, let's kind of change the topics away from stocks, because I know you guys are an IRA and you talk to a lot of individual investors. One of the big kind of challenges that we're going to experience over the coming years and maybe even decades is the fact that bonds, where they used to be a nice kind of complement to a portfolio because they were negatively correlated to stocks and they offered a decent positive real yield, all of a sudden they've gone shrunk to almost zero. It looks like there's not going to be positively or negatively correlated to stocks anymore. What is a retail investor to do with the fixed income portion of their portfolio now?
Yeah, this is a really, really, really tricky one. In my opinion, this is the biggest problem that investors have to face, and not just retail. We're all in the same boat. And so here's the deal. We have to invest in the world as it is, not as we wish it was. So we just have to and this is not a solution, but I think it's the answer. We have to reduce our return assumptions. We cannot manufacture a yield where it doesn't exist. So there's just trade-offs. So I understand nobody wants to lock in 70 basis points on the 10-year Treasury. I totally get it. That doesn't sound too appealing to me. The alternative is you either stay in cash, and obviously if you don't like 70 basis points in bonds, you're not gonna like 0 basis points in cash. You can go to more exotic strategies, long short strategies, or other alternative strategies, or you can go to stocks where you could lose 10% in a week. There are no easy answers. So I think that the only sensible answer right now is to reduce your return expectation rather than try and manufacture returns where you're going to be taking more risk in products and strategies that you don't understand.
What happens when you try to tell clients that?
That's what it is. And for some people, they understand. If it's not good enough, listen, I can get you yield. You want convertibles, you want junk, you want MLPs, you want mall REITs. Like, what do you want?
Right.
Now that yield could disappear in an afternoon. So I think that our job almost for our clients is to explain to them why we're not going to give them the yield. We can't do it. If
Right.
the 10 years yielding 70 basis points, that's the anchor. And you should be very wary of anybody promising 4, 5, 6, 7, 8% guaranteed returns.
Isn't it then amazing the fact that a lot of these pension funds are sitting there still with 8% as their expected returns over the next decade?
Well, they have no choice. I mean, they lower their return expectations, and their funded liabilities go through the roof. So they're I don't know what's going to happen there. That's pretty worrisome. But here's the other side of this. We've been having this conversation for years now, and I understand that there's a difference between 70 basis points and 2%. But we've been having this conversation for years. And Meb Faber tweeted earlier today that I don't know over what time, but the return for Japanese government bonds, once they went below 2%, the return, and again, I don't know what year this was, but the return, those bonds are up 30%. So it's not a, so again, so let's say that we had this conversation with an investor to start the year. Listen, why would I own bonds? I don't want them. They're yielding 1%. Well, they're up 6, 7, 8% year to date. And even though they're not, well, bonds have been positively correlated to stocks for a long time. It's just that people think that they're going to be negatively correlated when shit hits a fan. And they are. Bonds gave you protection earlier in the year. Now, there was that 1 week of dislocation when the Fed stepped in. I think it was the week of March 15th to the 20th or something like that. But by and large, bonds were at least the ballast, and they gave you something to rebalance out of. That was your dry powder. And so I think that bonds at this point, it's capital preservation at best. It's an asset allocation play. Obviously it's not an income play. Those days are long over. It's not even necessarily a total return play. It is what it is. You have to play the field as it lies. Like what the hell was the giant who said it to Shooter McGavin? Whatever.
That's the Shooter McGavin. Okay, what did they say to Shooter McGavin? I don't know. One of our listeners will get back to us. The fact that you quote that, aren't you way too young for Shooter McGavin?
Oh, no. I was born in 1985.
So when was Shooter McGavin? I thought I saw that when I was maybe.
Happy Gilmore was 96.
Oh, okay. So you're 11. Oh, your parents were very liberal about letting you watch stuff.
Oh my God! I think I saw Nightmare on Elm Street when I was like 5 years old. I've never been the same since.
So listen, you know what? This is great, and I know you have a couple little ones at home, so we're not going to keep you as long as we usually would. But we have to talk a little. I know you're a big basketball fan, and Patrick and I are Canadians, and we don't know anything about basketball. When I watch,
we're in Canada.
We're in Toronto. And when I watched,
did you see the game last night?
No, well, I did see the final moments, and pretty exciting stuff, eh?
Holy cow, that was insane. So I'm sorry, what were you going to say?
I was going to say, well, I was going to say, what do you think of Toronto's chances? I was going to ask for like someone who actually knows something of us doing it 2 years in a row. And actually, before we even talk about our chances this year, how does America feel that your sport was won by Canadians last year?
Yeah, that's a good question. I never really thought about that, but that's interesting.
Yeah, you guys just basically consider Toronto part of U.S. Like just.
I guess. So this just goes to show that like you could have all the information and still not know the outcome. So if you asked me what are Toronto's chances this year, I would have said, well, I don't know. They lost the best player in the league, so probably not great. And somehow they replaced Apple with Tesla. I don't know how they did it, but but Nick Nurse is obviously an incredible coach, and he got the most out of his team. But it's not. It was looking really bleak with about half a second to go in the fourth quarter when you guys were about to go down 3-0. Pascal Siakam has been a big disappointment this series, but at least you've got a fighting chance. You're down 2-1, and we'll see what happens in Game 4.
Okay, well, there you go. So one of the things that I always love to ask our guests is if you could go and meet your younger self and ask them, after learning some things in the world, what advice would you give them? So let's go back and talk to the Michael that's about to go to university. What advice would you give him today?
Well, I could tell you this. I was smoking blunts, so I definitely wouldn't have listened.
You'd fit in just great up here, buddy. Like that's like Canada. That's what seems to be all that we're about.
But if I could have given myself a piece of advice, and again, I would not have listened, but I would have said, for God's sakes, like, be a little bit serious for a second, because this is your future you're talking about. And there's a reason why everybody else around you is working so hard. So maybe stop being an asshole and go to class.
There you go. That's actually the advice that I give my kids. Stop being an asshole and go to class. I actually don't say the first bit, but I do say that one of the easiest things for students is just show up for class, because think about how many people don't go. If you go, you're at an inherent advantage just because there's so many people that are smoking blunts and not going. So you're just, it's so much easier. Anyways, Michael, it's been a joy having you. I really enjoyed this. Thank you very much for taking time. We'll let you go and have a great Labor Day.
Thanks so much, guys. Really appreciate it.
Okay, take care. Oh, cheers. You know what? One last thing. We should let you plug your stuff. I love your YouTube videos and stuff like that. Why don't you tell people where they can find you? You and Josh shooting the shit. It's a lot of fun. Why don't you give people kind of just the 2-second plug of where they can find the information?
Thank you. So we do a video every Tuesday at 5:30 on YouTube called What Are Your Thoughts? Josh and I do like a PTI style conversation. We ask each other 3 topics and we just shoot the shit. So every Tuesday on YouTube at 5:30, search for The Compound. What Are Your Thoughts?
It's great stuff. It's the best Josh Brown stuff. Way better than that CNBC shit. Anyways, thanks a lot, Michael. Take care. Okay, it's that time of month again. Kuppy's Corner. And as usual, Kuppy's on vacation. Welcome to the show, bud. It seems like every time we call you, you're on vacation.
I do about 2-3 weeks a quarter. So, yeah, it'd probably be about one every 3.
Okay.
Well, listen, what a day to record, right? Like we got a shit show market all of a sudden.
Oh yeah, it's glorious.
Okay, so it's glorious. Why? What are you doing in this market?
Oh, I'm just getting beaten in. That's I'm not making any money. But, these Robin Hooders, they've screwed up the market for so long. It's been, 6 months, 12 months, whatever you want to think about it. They've screwed it up so much. And it's just great to see the divergence between QQQ and IWN. Those guys are getting hosed, and hopefully they get margin called, and hopefully things will go back to sort of normal, in quotes. And I guess the biggest Robin Hooder of them all, I guess, is SoftBank. And Basta went on a crazy, kamikaze run where he was buying like weekly call options on Apple and Cubes, or who knows what he was buying.
$1 billion of options, buddy.
It was bigger. It was actually bigger. You know what?
Yeah, it was like 20 billion notional exposure.
Yeah, I've heard that it's actually bigger and that everyone's underreporting.
Wow.
Like from guys on the actual desk.
Are these like Friday calls or something, or was he at least buying something?
I think they were a month or two, and I think guys had to sell him call spreads because he was doing such big size that they wouldn't just sell him outright.
So the kamikaze run is over.
Yeah, but the thing is, what's interesting is he's gotten the whole street short gamma at a point when usually when the market's up, all the street is choking on long theta and just kind of dying, and yet now everyone's short gamma, and that's why we've had the past 2 days, is because once the selling started, it just kind of steamrolled on itself and there's no bids. and everyone's convinced that they think this is a real market and that we were up here on fundamentals. And the reality was it was up here because of SoftBank's lunatics like strategy.
And then everyone delta hedged, and then they had to all roll it all down.
Yeah, and listen, and they're just I think we're going to look back at this period and just be shocked at this move. This is circa 1999.
Yeah,
Well, Massa effectively just opened a Robinhood account. He's just like, he's on a subreddit somewhere, and he's just like, check this one out, guys. You're doing 3 lots. I'm going to do it like 1,000,000 lot.
Okay, so let's talk about some different stock themes and what you're kind of thinking in here. And actually, you and I have gone back on politics a little bit. I was wondering if you would be so kind to kind of talk us through what you're seeing out there and what you think is going to happen in the coming weeks, because as we get closer to the election, this is going to be a bigger deal for the market. Would you not agree?
Oh, absolutely. I mean, I think going forward until after the election riots, what's going to drive everything in the market is politics.
Right.
Right. And Kev, just so you know, I really shouldn't text you when I'm drunk.
Yeah, it's all right. No worries. I told Kuppy, I said, listen, it's time for you to go and just go back to the bar and leave me alone right now. One of the things you're talking about the election, and I was just looking, and I have this trade on where I'm actually short the election VIX. And I was looking at it the other day and realizing how much I've gotten run over by my election butterfly, and that the spread between the September, October, November kind of butterfly has ballooned out to $8. It was $4 in August. So as crazy as we thought it was in August, it's basically gotten double crazy.
But you know what's weird is that it's not pricing in any of the November riots or the 6 month of lobbying the Supreme Court to see who actually won. Like it's weird that it drops off there, and you'd think it just stays steep.
Okay. So in fact, you're kind of arguing that they all should be up, and there should be no drop off after October.
Does anyone think that this won't be challenged?
I don't know. But you know that I'm gonna keep my mouth shut. As Canadians, we're not gonna start talking about this.
I just think that what the market's realizing is that things are not going to be calm and bullish into the election, and so they're pricing in the volatility here in the post Labor Day in that bump. But I think that as soon as we start seeing that volatility, that will go out farther into the curve. I still think there's a trade there anticipating higher volatility in November. That's an interesting place to be trading, actually.
Yeah,
I would do the October-November calendar if you wanted to have a vol trade on, but that's just
short October, long November.
Yeah, why not?
I like it. I like your style, Kuppy. Well, I do agree that one of the things that really scares me is the fact that we're going to have. Never have we had more mail-in votes, and not only that, the mail-in votes seem to tend towards the Democratic side. So we could see a situation where the original kind of the night of the election, it's a GOP win, and then we have all the mail-in votes get counted, and it flips the other way, which has happened, I believe, in 3 of the California Senate races over the recent little while. And I just can't imagine.
You know more about
shit show
than I do.
But that's just the shit show. I just can't even imagine like the
100% chance of a shit show. Yes.
Yes.
So look, I think that the polling shows Trump coming ahead lately. I mean, he was really far behind. He's now, the polling shows him almost even money. The betting sites show him almost even money. If you have, better polling data, and one of my friends does, where he does really just phenomenal polling work. He's showing him quite ahead. I don't want to go too deep into how he's analyzing the data because that's very proprietary, but he just shows him far ahead now. And, I think the market's seeing that too. You see my loot has been pulling back. It used to be that every time there'd be a little flare up of violence, my loot would pop. And now, it goes down on violent days. It goes down on peaceful days. It just goes down.
Right.
I'm happy I cashed out. I cashed out about a week before the top. I've actually been writing some puts and getting myself back long, I guess.
So for those who don't, Kuppy, sorry to interrupt. For those who don't know what your loot is, why don't you kind of just give us a quick little explanation of what that is?
Yeah, sure. So when the riots first started, I said to myself, everyone's going to go buy themselves a gun. And, there's a bunch of names in the basket, but the key ones really are Ruger, Smith & Wesson, and Visto brands. And, Ruger and actually all three of them had great earnings. And they've just been trailing off for the past week now. And I think that's just recognition that Trump's going to win by a lot. He's going to win by enough that he'll be able to send in the Marines if he has to put down the riots. And, I just see these selling off. I see, a lot of the Trump names that I'm long, they're bidding up, coal and nat gas and prisons and, a lot of these things. I mean, it's hard to say they're bidding up, but I mean, the market's down. I mean, cubes are down 1,000 bips in 2 days, and these things are unsure up. And, just showing you that relative strength kind of underneath the market that, these things are all down a nickel or a dime, and, the market's kind of getting its head handed to him. And I think that's just kind of recognition that Trump's going to win. He's probably going to win by a decent amount, like enough that they might not even have to contest it. And, I like my Trumper trades.
Okay.
Doesn't mean, I don't shift 3 more times before the election, but as of right now, I got a basket of these things on and I'm feeling good about it.
So Kuppy, let me ask you this then: what under that scenario that the Trump wins clean, does the market rally hard after that?
Probably. I mean, it's Project Zimbabwe. I think one of the hardest trades there is in this planet right now is trying to grab a 500 bips contra trend trade, and you're shorting the market when 6 months or a year from now it's probably going to be double here. Like, it's just going straight up. And I have a lot of friends who messed around with it. I'll admit I sold a few Tesla calls. It's just it's a hard trade, and I'd much rather be long. And quite honestly, I pulled in everything today. I had some calls out there, and I pulled it all in. And I'm just writing more and more vol. Put vol in stuff I really do want to own. And I think that's the much easier trade because you're getting paid a pretty hefty vol here to write small cap puts, and a lot of these things really haven't rallied that much compared to big mega tech. So look at my Ruger. Like, I'm riding the 67 and a halves. I got paid 6 on some today. I got paid 7 on some today. I mean, it gets me long. Let's say I write them at 7. I get back long at 60 half. I mean, that's where I bought the original basket, and gun demand is going to be up way higher than it was last year. And I just feel like it's a good spot to be.
So Kuppy, let's talk Tesla then for a second. I mean, first of all, Elon Musk did that capital raise like perfectly, didn't he?
No, he didn't do it. He didn't. So what he did was he announced that it's an at the market. Is that what it's called? Basically, he can sell into the market whenever he wants. He didn't do it. I think it's basically he's going to plug it when it goes into the S&P 500. So when it gets announced that it gets into the 500, it's just going to be sold to you, and he's going to use that liquidity to basically issue stock.
So,
or he could have just whacked at 100 already, and he's all out.
Yeah,
5 billion sold. Who knows?
Yeah, who knows? I'll take the other side of that. I think it was designed to go to plug the S&P 500 inclusion bid. Listen,
and when is that though?
It might happen anytime. There's speculation it'll be announced this weekend.
Okay. So
that's it. But it's not. You're right that it ended up being that announcement was the top, but it didn't actually have. He hasn't sold it yet. Or Kuppy is correct. We don't know. We won't know till after the fact. But it is actually an interesting move by Elon, and I'm loath to say he's a genius at anything. But if there was anything that he was going to be a genius on, it's basically
if he pulled this off.
Getting ready to hit the S&P 500 inclusion bid with just tons of stock. Like it's kind of almost like a reverse buyback.
I have some grudging respect for him. He's played his hand better than I've played my hand betting against him. So,
I think he's the greatest stock. I think he's the world's greatest stock promoter that's ever lived.
Yes, way better than Ivor Kruger.
Yeah. The greatest stock promoter that's ever lived. Okay, so let's talk about what else we're seeing here. The shipping, everyone always wants to know what's going on there. Let's just get that out of the way.
Oh, God help me. Look, long tankers. I think structurally, there's a lot of macros in play that are really bullish. Rates suck right now. Rates always suck in summer. We'll see what the fall looks like. But I'm bullish. I'm long. I tossed my Scorpio. I'm all out of that. But I shifted the money into Dorian and TK. I mean, propane tankers are actually getting really good rates right now, and Dorian's going to make a fortune. And TK locked in a third of their vessels for next year, so it doesn't really matter that rates are low. And that's really where I'm focused. I own some Euronav and some International Seaway, but it's really the Dorian and the TK that I have my money on.
Okay,
now,
sorry,
Pat. I was just going to ask though, because what's interesting is crude oil is actually pretty much still contango. And if crude oil here turns with the market, that contango might steepen as the spot just heads much lower. I mean, do you think that could spur some interest back into these shippers?
Well, I don't think it's a contango trade anymore. I mean, that was a moment in time, and a lot of these companies made between a quarter and a third of their net asset value in 2 months, which is I timed it perfectly and called the trade. I think the next trade really is that the U.S. is going to go from 13 million of production to, let's call it 9, and demand will be back to normal. So we're going to need 4 million barrels. We used to import over 1 million from Canada, and that's going to be sort of shut off because they have the same shale dynamics we do. So let's call it 5 that needs to come in seaborne, and you start looking around the galaxy and. Mexico isn't really increasing. They need it themselves. Guyana is like a couple 200,000 barrels. Brazil is up 100,000. West Africa is kind of unch. Libya has no government. North Sea is up small, but terminal decline. Like, where are you going to get these barrels from? We need, 4 or 5 million incremental barrels here in the United States. I think we're going to get them from the Middle East. I think that's a very long haul cargo. I think we have to work down some inventory for another month or two, but I sure ain't selling down here because I think it's going to look very good looking forward 6 more months. And, I'm really looking for a spot to buy the first kind of up week in rates because I think it's going to last for a while.
Right.
That sounds okay. Kuppy. The other thing is you're traveling around the south of the United States. We've talked about the fact that housing's on fire in the past. What's your man on the ground kind of update?
Well, I mean, cities are a mess. If you haven't been paying attention, they're suddenly horrifically violent. They're looting and riots and tear gas. I mean, who the hell wants that? Plus, like, all the things that make cities great, like restaurants and bar scenes, like, you're not allowed to go indoors. Like, who wants that? And so everyone's moving to the burbs. You see this huge drop down in property prices in cities, and the burbs and rural are booming, and there's a huge call on housing demand. Right now my fund is north of 30% between housing plays. I mean, this is a pretty big trade for me. I got basically 3 trades on, and
you're getting Kevin really excited by you saying that. I think he perked up in his chair.
Well, Kuppy and I have long been. I knew this was coming. Kuppy and I have long been housing bulls. Talk about some of your different plays like that you on the housing side.
Well, anything that goes into a home, okay? Everything from windows to sidings to doors to plumbing. I mean, you're looking at an industry that's actually a reasonably good industry. These guys had okay returns on capital to bordering on decent returns on capital when demand in the United States was below 1 million. And if demand spikes and there's been a lot of consolidation, I think you're going to pick up a couple hundred bips of margin. You're going to pick up 1 or 2 more inventory turns a year. And I think you're going to pick up quite a lot of revenue. And, I think these things could be 30, 40 return on tangible capital sort of businesses leveraged 3 or 4 times. You're making 100% of your money each year. And, there's a few of them I like. I own. We talked about Blue Links. I sold that. That was, almost a triple. But there's a few others that I've been buying in this pullback. And then there's one land play I'd rather not name, but it's a very large position for me as well. And, I really do think that some of these areas that don't have so many people today will 5 years from now have a whole lot of people, especially if they're in the state of Florida.
Right. Kuppy, one of the things that I would kind of threw an idea out at you last week and you shot me down right away. And I thought, it'd be a great thing to talk about is the fact that looks like the Democrats and even the Republicans are leaning towards legalizing marijuana on a federal level in your country. And I kind of said, maybe there's a play there, maybe there's a stocks to own, and you kind of push back against that. Why don't we talk a little bit about that? Tell me why these aren't something that you like and get excited by.
So let me preface this by saying that I don't know too much about the topic. I'm a drinker.
Never stops me, Kuppy. It never stops me.
I'm a drinker, not a stoner. But in the end, if you look at the U.S. states, and there's 50 of them, and they all have varying degrees of legalization and non-legalization. It's this weird patchworky thing. And some states are very profitable. Some states have zero profitability. It just depends how the laws are written. And so you're going to buy into a business based on the laws staying constant when we know that the laws are changing very rapidly in the cannabis industry. And some of these states, like the state of Florida, are amazingly lucrative because there's very few players. And it's something of a monopoly business with a lot of regulation. And, it could very much end up looking like California or Colorado, where there's really no profitability. And I don't know how you buy something and bet on what the regulatory regime looks like in 2 years. That's how long it takes before the next election, or they do these like plebiscites or whatever. It just seems hard to me.
Right. And so you just go try to find easier stuff. I think the other thing you said is very little moat in terms of starting one of these companies.
Right. I mean, everyone keeps saying it's going to be branded. It's going to be like Budweiser, and you're going to have this moated brand. Well, what if you end up just being like the local brewery and they make phenomenal beer and people drink it within about a 10-mile radius, and then, 3 more pop up, and, it's just like craft brewery was really good 15 years ago. It's not good right now. There's just too many of them, and they all have great product, but there's no moat.
That's right. And not only that, not enough of them sponsor us.
We need more sponsors. Hint,
okay.
hint. No.
So we're going to let you get back to your vacation. Is there any other anything on your mind? What's your favorite trade right here? Like what excites you the most?
Writing puts. This sell-off is, going to be a great opportunity to find things you really like and write puts on them. I mean, I'm a big believer that you sell vol into a sell-off.
Well, there you go.
I'm with you on that one.
Oh, Patrick,
you never sell. What
do you mean?
Out there.
Oh my God, I have a whole segment of big picture trading that's option writing, and that's all I do.
That's right.
In that segment. All right.
Okay. Jesus. We stepped all over Kuppy. He was saying something else. What else did you say, Kuppy?
Oh no, I'm just saying, like, if they're going to jack up vols, 10 points on, the SPY, they're going to jack it up 40 points on the things I like, and the things I like haven't even rallied. So in theory, they're just a lot less risky. And I'm just writing these things at 10 to 15% a month. And, every once in a while I get tagged on one, and I'm not upset because I don't mind owning it. But it's just the easiest money there is. And I've just taken my long exposure way down because you can just write puts and, be structurally long.
Right. Right. So the Kuppy, the income producing portfolio. Who would have thought it?
I would never have thought it. The thing is, you got to be really flexible. I've been writing a bunch about this event-driven stuff just because, it didn't really do much for a year or two because there's no volatility, and now it's just this cash flow machine. And I don't want to look at a cheap stock that may go up next year. Like, what's the point? There's a ton of things where you have catalyst-driven money flows where stuff has to happen, and it's just it's a unique moment in time where you kind of become a day trader. That's
great. Well, listen, Kuppy, thanks very much for checking in. Go have a great rest of the vacation. Whereabouts are you, and what's got planned for the next week?
I'm in Crystal River, Florida, and I'm heading up to the Panhandle again. I love it up there.
He's gonna leave Miami for the Panhandle. I can see it already. Anyway, thanks for checking in, Kuppy.
Yeah,
have a great week.
Sure.
Thanks, Kuppy.
Do
you want me to do that again?
No. It was good.
Nina, that's fine. Just leave all this in. What's our beer this week?
Today we are drinking Reverie Hawaiian Punch IPA from Rorschach Brewing Company.
Hawaiian Punch.
Yes, I picked this for you.
I already know what Kevin's gonna say, but
I kind of like stuff. I'm a pineapple and kind of ham pizza guy, so maybe I'll like this.
All right,
Yeah,
talk to
so-
us about this. What are we drinking?
So the Reverie series, because it comes in a berry flavor as well, I believe.
Oh,
It strives to bring us to a dreamlike state, reminiscing over our earlier days enjoying cherished ice cream treats. The fluffy, cloud-like texture matches the abundant fruit and hop character, and hint of sweetness will keep you pleasantly lost in your thoughts.
okay.
Are you lost?
No comment. I'm lost trying to get my breath back.
You know what? This is actually
Oh,
this.
God.
It's exactly what I expected it to be. It's exactly what I expected.
Definitely
You know,
packs
and
a punch.
You
that's
know what?
for sure.
I'll tell you, if I'm sitting around in a hot summer's day, this is I'll drink this for sure. But,
Patrick, you have the worst tasting beer. I swear to God. Anyways, let's just go on. I shouldn't say anything bad about our beer.
Oh,
Nothing
anyway,
in
give
the-
us the disclaimers, buddy.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects of too much huddle may include swelling deficit, the tech tumblies, or the Chinese treasury dumps. I kind of like those.
All right, let's move on.
Okay, Patrick, talking charts. What do you have in store for us?
Oh, listen, what are we not going to talk about? My goodness, what a middle of the week we had right to the close, right? Let's just start with the S&P futures and just look at the SPOOs here. But let's break it down to a 1 hour chart. First of all, yes, it was a pretty heavy 2 days of selling. But, we literally only wiped out 2 weeks of price action, right? We're back to the same prices we were in the third week of August.
Yeah.
Right. And so this is not yet something really serious. And but when we go down to the 1 hour charts, you can just really see how intense that was for two very heavy waves down. The selling just came in so hard for 2 days in a row. A little bit of a bounce, but the question now really is we have a Labor Day weekend. And we have a lot of the volume and traders and everyone's back to business next week. Will we really see a rebound, or is this just the beginning of the kind of pre-election volatility that could potentially emerge? It's going to be so interesting to watch, right?
Right. And I think we should talk a little bit about different sectors of the market.
Yeah,
Because
for
although it was ugly you're pulling up the S&P, the real damage was in the NASDAQ, right?
What you call it, the NASDAQ?
The
okay.
NASDAQ, yeah.
All right, so let's pull up the NASDAQ futures. Okay, go for it here. But yeah.
Yeah, like that was where the real pain came. Now, it was the stuff that had been rallying the hardest.
Yeah,
And
10%, 1,300 points, top to bottom.
Right. And it was huge. And we've been warning about this, and I almost don't believe that this was true and this was real, because both you and I were bearish.
Yeah.
And it worked.
And our listeners know that now most of the time when we both agree on something, the market does the exact opposite.
Listen, it is 2020, so it does make sense that we both can get it right in this messed up world.
Right.
This is the year to do it.
So anyway, but let's go back to the SPOOs for a moment and just really stop and I want to emphasize one important thing. This isn't yet a market crash, and there's so many people out there that are so certain that this is all going to unravel. And the fact that we are getting closer to the election, the fact that the market is so overextended, the fact that we had these blow-offs in some of these techs, maybe those are all the kind of criteria that maybe weigh more to the fact that this could be a major turn. But I want to really point out that really all year, we have only ever seen since the March low, these kind of 2-3 day sell-offs. And then that's it. And then the buy on dip traders will almost always come back in. Now, this one was a little more intense than, let's say, some of these smaller ones, but usually 2-3 days, and the market just gets bought on dip. And so for all of the selling that happened here to finish the week, I really think the big tell comes early next week as to whether it's bought.
I'll take the other side of that, Patrick. I think it's a change in trend. I think that rallies are to be sold now.
I just think, you know what? but to be honest, that's a part of what I was trying to emphasize, right? Which is the fact that we are going to see them probably put in a short-term low early next week, and that's going to rally. But will the rally be sold? That, to me, is the big sell signal. Right, and so will that be the case? And so,
well, Patrick, I'll as usual. You're technical. You're not putting your committing to anything. I will say you should sell that rally, or I wouldn't say you should sell it. I will sell that rally.
Okay. You know what? I'm bearish enough to I'm trying to be very neutral here, but
no, you don't have to be. Listen,
I am.
Not only that,
okay,
we've gotten rid of the curse. We can both agree, and it'll work.
All right.
That's and I think it's only
going
to be
just goochered it for sure.
No, it's only 2020. I'm pretty sure that it's only this year that it'll work because 2020 is just a messed up year. So I think we should enjoy these 3 months that we still have of us both being able to be on the same side of a trade and working.
All right. Well, there's a couple of things that I want to just emphasize that I'm watching that to me don't totally add up to everything. Because to me, if we were right now, maybe we are seeing a tech sell-off, maybe an asset rotation. Maybe we're going to see some of the defensive sectors, have asset rotation as they're selling the techs and buying your Coca-Colas, right? And you could see that kind of a rotation come in. But if we were to see a liquidity event, something that really downdrafts the market, let's say, forget the COVID crash, but let's say it was a similar market decline to the Christmas massacre of 2018. Right? Just some sort of sustained multi-month distribution cycle. You would think that the U.S. dollar would have, in some degree, reacted stronger. And we haven't seen it react. It didn't do anything negative, but it didn't also really, there wasn't any money flow going in here taking the dollar higher. So that to me, I would have, if I'm thinking that this is going to be a big market crash of some sort, I would want to be seeing some sort of intermarket confirmation coming from somewhere. And at least initially, it has not come from the dollar yet. And I'll say, because that could still come around, right? You have an opinion on that?
On the dollar, I don't want to goocher it, but now that I've said it, I think we're okay. I actually think that the dollar's headed higher. Okay. I think we've reached a short term.
But why didn't it rally on an impulse like the market dropping?
I don't know. I just think you guys, when it doesn't behave exactly like you want, you guys get all.
Inner markets are a general trend and doesn't have to be a day-to-day correlation. I agree with you on that. So what's interesting is that there are commodities. We'll talk about oil, which is not, but there are commodities that actually had a pretty good update, right? Like copper is trying to break out to back to its highs. All the dips keep getting bought. Right in Fibonacci zones, by the way, and is rolling up. And so you would think that these types of things would have been being hammered on this, and they're not. Like even natural gas. I know this is the continuous contract. We probably should be looking at one of the monthlies, but rolling back up. Things don't look like they're unraveling in the commodity space. But what is interesting is the breakdown in oil. And oil is such a huge market relative to the other commodities.
It's the granddaddy. It's the real.
It's the real deal. It's bigger than all the basic material markets combined, right? And what a breakdown today.
It's not looking good.
And that is definitely something that I'm paying attention to. What is interesting though, and how do you connect the dots on this? Because I mean, maybe I'm overreading into it, but I would have thought that if oil's going to go down, that typically immediately flags almost a disinflationary impulse of some sort, and you would have thought that interest rates and bonds would have reacted at least positively in a period where the stock market was going down, oil's going down. My first thing is everyone's going to go and find safety in Treasury, and that didn't seem to show up today at all, did it?
Yeah, because you're stuck. You're stuck in an old world where you think that people are going to run to a Treasury bond. Like it's not going to happen anymore.
Oh,
Treasuries
I call bullshit on you, dude.
Okay, that's fine.
No, listen,
you run to your Treasury bond and go buy it, and I'm not going to buy it. I'm going to be selling it to you.
One day, there is going to be a massive regime change, and the whole thing will stop working. And one day you'll be able to say that, look, I was right because I've been talking about it for 10 years. But that's nonsense. I'm telling you right now, 2020, bonds still behave as a risk-off asset, and that's not going to change just because Kevin Muir said so.
Okay, well,
anyway,
why didn't they go up today then?
Well, that's I am asking it because like it is weird that it didn't, and it's not what I expected to see. But
I'm wrong.
But does that make you?
But I'm the one that's wrong.
No, but does that make you right on your big picture call that people
No,
will not buy Treasury?
I'm just trying to tell you that it's going to be difficult for treasuries to behave like everyone thinks they are.
There'll be a minimum safe haven. Maybe they won't rip higher. Maybe there isn't a 10% upside on the 10-year Treasury on a market crack. But there'll be safe haven element to it. I doubt it's going to sell on it.
I don't think it's going to sell. Anyways, I just think that they're trading in a world onto their own. I don't think, and in fact, I think in a deflationary liquidity world, we actually might see them go down with the stock market. It wouldn't surprise me at all, Patrick, if we had a week or two or even a month of bonds going down, stocks going down, and the dollar going up.
I feel like we have a burger bet building up here, like because
what do you want to do?
It's so like the hair on the back of my neck is standing up when you talk about this shit.
Okay,
like,
I'll tell you what.
Okay,
so this. Let's take the 10.
You're just said that you think that it wouldn't surprise you if bonds sold off with a stock market rally.
That's right.
That they're correlated.
Yeah.
All right. So how do we put this into a bet?
Well, I think we just
because I don't think that will be the case. I think that bonds will behave well when stocks are going down.
Yeah. Well, it's too complicated to bet, especially for you. You have. Everything needs to be pictures for you.
All right. Let's make it simple. The 140 level on the 10-year Treasury right here. Okay?
Okay.
If the stock market's slamming, it's triggered by a market sell-off that is sustained, right? That you're right that the market continues to sell was your narrative. So let's, under the assumption that the stock market goes down 10+%. From its highs, like we're in a full-on 10-15% style market correction. I bet you we're north of 140.
It closes north of 140 or it ticks north?
No, close above 140.
Sold to you.
All right, burger bet.
Done.
I found this great burger joint actually near my place on the Queensway. I think I'm going to take you there when I lose, right?
Yeah. At least you're honest. At least you're realistic about it. Okay. What else you got for us?
All right. No, you know what? Really, it was just the fact that the oil's breaking and the bonds didn't stay correlated. Like I thought it was weird. Anyway, let's just talk about some of these big boys like Tesla, right? Now there's rumors that Tesla was going to be potentially put into the S&P 500.
Okay. So whoa, I'll stop you right here, Patrick, because as you were going through all your magic incantations, I was actually trading Tesla because they have just announced that they are not going into the S&P 500.
Ooh.
Or
and that's why it's down to it's 400 after
it's after hours, it's down $18. So
okay, that's not news anymore. Thank you for enlightening me. But what is going to be interesting is that so far this entire pullback has just been a Fibonacci retracement. And so right now the bulls can anchor themselves simply on this idea that this is a bull advance. This has been, your 50 to 61% Fibonacci retracement right down to its moving averages, and it's imminently going to begin its next bull advance. And so watching what it does here early next week is going to be critical, because if it starts slamming through 350 and going lower down, I can't believe that just to go back to where it was in the middle of August is going back towards 250. Like, isn't that insane?
Yeah, it's nuts. Like I was doing a show the other day. I was cheating on you, and I had some notes here. Tesla, since the end of June, is up 133%. Or was up 133%. Think about that. Since the end of June.
Right. And you know what? I went on that other show that I cheat on you on. Yeah. I put up a chart showing.
1 second. We have an open relationship.
that this drop for Tesla just to go back to its February high of 2020 is a 60% decline from top to bottom.
Wow.
Right? Like in order to just trade at the highs of pre-COVID, it would take a 60% wipeout in the stock. And you know how many people just get nervous at the thought of a 60% decline in it, right? And that isn't that amazing that it's like. But I'm not trying to. I think that anyway. It probably will go down. It probably will. If it breaks through the fib zones, it's definitely going to head substantially lower.
Oh God. Okay, so what are the fib zones so I know when I should
about
be selling?
350? Like you could see the fib zone is right where its lows were.
So you want me to sell it when it's down another $50?
No, I'm saying that if the bulls have a chance to save it on a buy on dip here, and it's like if they can't if rallies are rolling. And it's failing below and it breaks below 350. That's just confirmation that the buy on dip isn't working and that it's going to be in a new downtrend.
I think that Tesla is one of the most amazing stocks that has ever lived, and that we are going to be talking about this for generations, because I'm shocked at how big a stock has been moved up so much. And I get it. It's not a car company. It's a technology company. I get it. Elon Musk is a genius. He's not the world's greatest stock promoter. Regardless, you have to just be impressed with this craziness. And, you know, Michael was talking about it. How is there ever been a stock in history that have had more really smart people get it wrong? Like, I can't think of anything. This is honestly, there's going to be books and movies created about this. Like, for those young people that are always sitting around lamenting the fact that they missed out some of the greatest, craziest times, you're experiencing it now. Yeah,
this is definitely history.
Yeah, this is going to be the world's
He's the third at the peak. He was the third wealthiest man in the world.
Yeah, and this is a guy that people thought wasn't going to be able to make the payments on his house, like his mortgages, a little while ago. Honestly, there was smart people saying this, that he had mortgaged up all of his houses. You know, and let's face it, it was only a few years ago that Tesla almost missed payroll. Yep. And yet now he's the third richest man in the world.
Not after that 20% drop.
Yeah. And one of the things actually we should talk about, Patrick, is that when we didn't talk about the issue, the at the market issue that he's announced. And one of the things that people should realize is that although he announced that issue and that it ended up being the high when the stock rolled over, that doesn't mean that they actually issued the shares. My whole thinking of that was that he was creating that to basically sell into the S&P 500 announcement. And now that it's not here, who knows what he's going to do? Is he going to sell it at the market? But he could be going and actually selling stock now in the market. It's any time. And it's crazy. Yeah. It's kind of like, listen, I actually am all for it. I think it's an interesting way of issuing stock. And I actually like this about him. But I think people should.
He's kiboshing his existing investors by providing that liquidity in order to pad up the balance sheet, right?
$3.90 now, Patrick. Down $20.
Yeah.
Looks like there was a little
bit. The party is getting started.
Looks like there was a little bit of speculation that they were going to go into the S&P 500.
There you go. Anyway, I think that's enough for the talking charts. We'll continue the conversation next week. All right, let's go on.
Patrick, this week in trading history, what story do you have for us?
Well, you know what? We mashed up two different things that happened in the U.S. In the creation of the U.S. Treasury and as well as the creation of the U.S. dollar. They both happened in this week in September. One in 1776 and the other in 1789. So now most of our listeners are familiar with Thomas Jefferson. Some of them know him as the third president of the United States, and others know him as in his breakout role in the musical Hamilton, right? Nonetheless, he's a major credit to the creation of the U.S. dollar as we know it today. Jefferson's era was racked with currency issues in budding British colonies on the American coast, there was a chronic scarcity of British coins. He found this especially frustrating considering all the debts that were owed to him and to be paid an array of different valuables. So, for example, one of Jefferson's most troublesome legal clients finally paid him in a motley mixture of silver and gold, these half-joes and Madoris of Portugal, or the doubloons and pistoles. I don't even know if I'm saying those right, from Spain.
You probably aren't.
And probably not. And then like even... The point is that he was getting paid in all of these different coinage. And so for Jefferson, there had to be a better way to do this. He felt that a common currency would bind the country together and aid in the support of the new national government. So in This Week in History in 1776, Jefferson drafted a congressional report on the value of gold and silver, where he advocated for a currency based on decimals, similar to the Spanish coins, using something called the dollar system. Now, meanwhile, Congress is coming to the realization that war is expensive, and at the time they had no power to levy or collect taxes, nor was there a tangible basis for securing funds from foreign investors or governments. After all, they were just a colony, so how could they go about raising the money? Well, the first thing Congress did was issue $2 million in bills of credit, promising redemption at a later date. Next, they told their colonies that they each had to contribute to their new government fund, overseen by a Congress Treasury Committee. So when they signed the Declaration of Independence, the newborn republic could suddenly claim loans from abroad. So those 2 million notes quickly became 240 million worth of newly issued notes, and they were called the Continental currency, otherwise known as Continentals. This system suffered from wild depreciation throughout the war, or inflation, as the British even attempted to sabotage the American economy by flooding the market with counterfeit Continentals. Now, in just the first 2 years, they were worth only about 15% of their face value from when they were issued, and then just 4 years later, they were worth about 3% of their value. Benjamin Franklin had even noted that the depreciation of the currency had, in effect, acted as a tax for actually paying for the war. But it was in 1781 the value of the Continentals collapsed, and there were protests in the streets. So Jefferson continued to lobby, and in 1784 drafted his famous Notes on Coinage decimal-based system and sent it for congressional review. They approved of his plan in principle, and he proposed the system his proposed system made front-page news, and ultimately this decision resulted in the formation of the U.S. dollar that we know today. In addition to the creation of the dollar, it was also This Week in History on September 2nd, 1789, just over a decade later, where Robert Morris created the U.S. Treasury Department. The first secretary of that Treasury Department was Alexander Hamilton. So Jefferson returned to the United States to serve as Washington's Secretary of State, and over the next several years, Jefferson worked to create a mint. And nearly 16 years from his first presentation of the idea in 1792, his plan came to fruition, and the U.S. Mint was created and placed under the jurisdiction of the Secretary of the State, which was Jefferson at the time. And then, of course, Jefferson went on to be the third president of the United States, serving 2 terms in 1801 and 1809. And so that was This Week in Trading History, where the U.S. dollar and the U.S. Treasury came to existence.
Thanks for sharing that with us, Patrick.
And words of knowledge, wisdom, right?
I guess
History,
so.
anyway. History is the best place. Right. Anyway, so let's move on, bud. So let's get Taylor on here to set us up for the WTF clip of the week.
So in this week's WTF clip, it's taken from CNBC with this big panel of people, and the anchor's like, "You can't afford to not be in tech right now." Then everyone starts chiming in, "You know what? You can be too diversified. You need to be in tech right now. If you're not, you're an idiot." It reminds me of when you're growing up and your mom goes, "Hey, if everyone jumped off a cliff, would you do it too?" Mom, you don't understand, okay? Cliffs are hot right now. Okay, is Buffett buying cliffs? So I took it and I mashed it up with a great clip from the poker movie Rounders with Matt Damon. I know last week's clip had Matt Damon too. I guess I'm in a Matt Damon phase right now. Anyway, I hope you guys enjoy it.
You must feel proud and good. Strong enough to beat the world.
You feel fine?
Me too. I feel okay. Of course, maybe we check with one other guy, see how he feels.
It's probably riskier not to own tech right here than to own it.
You could let it ride, Mike. Take your chances.
I'm going home.
Fine.
Tiffany, why don't you jump in here?
I do believe you can over-diversify.
You can't lose what you don't put in the middle. Deal. But you can't win much either.
It's riskier not to be in these names.
Just fucking kill me.
You know, Kev and Taylor, I was when I watched that, it's like it reminds me, and you know, I just got in the business in 1999, and I know, Kev, you were in the business for decades back in 1999, but and you probably didn't have hair back then either, right?
No, I actually had hair at that time, but I did have to go and walk into school with snow up to my chest. That's what you always hear your parents talking about. When I went to school,
uphill both ways, right?
That's right, uphill both ways.
But what I remember back then was in Canada, Nortel was, with BCE, we're like 30% of the capitalization of the entire Canadian stock market. And I heard the same thing about how can you not own Nortel? It's like, forget diversification. You had to own this because you had to be a part of that. And it's amazing. The way they said it literally sounded the same as what I remember hearing back then.
You know what? That's why people study history of the markets, because it just repeats and repeats and repeats.
Yeah. It's amazing. And so, it'll be interesting to see what becomes the next Nortel of this cycle. I mean, we have some ideas. I'm not going to say it, but
I'll say it. Tesla. Anyways,
you said it. All right.
Yeah.
Okay. But anyway, I thought great job, Taylor. I thought it was good. Anyway, let's move on. So let's do the top 3 things to watch next week. But before we do, we first always have to go back and rewatch or re-review what we talked about last week. And so let's quickly talk about it. The gold and silver breakout or fake out. Well, it was a fake out.
It was a fake out.
It was a fake out, but it didn't really break down either. It just was a false start. The starting gun didn't go, but I wouldn't call it an outright rout or anything yet, but it certainly did not follow through on that. So that's a fake out. So number 2 was the jobs and ISM numbers. What did you take away from it?
Well, the jobs today were kind of interesting because the unemployment rate went way down, but the payrolls created, I don't know. It's tough because it's so all over the map, Patrick.
And it's so confusing, and I'm sure the data coming in is so skewed, and the information is so trying to be interpreted and smoothed out, and who knows? Like I don't know if you can trust it. Can you?
I think you can trust it. I just don't know what it means.
Yeah. Okay. That's
like I think it's a reflection of whatever they're getting, but it's like garbage in, garbage out. Like if you're getting. There's a million people on different programs. There's so many different variables to it. It's very. I don't know. I'm not sure.
Yeah.
When things change so dramatically, it really makes it difficult to compare numbers, over one
and
another.
So many of the analysts in our space use like rate of change and things like this as the important metrics. And when you have such drastic moves, it kind of throws everything out of whack, right?
Yeah, like you saw those Wall Street Journal or graphics where they would put the unemployed, the amount of unemployed, and it would go down the front page all the way to the bottom because it broke charts. Like it literally broke charts.
Yeah. Absolutely.
It's kind of funny. Like, so wait 1 second, when you see like any of the administration bragging about how many jobs created, well, yeah, of course there's jobs created because there's jobs lost. So you have to look at the
People going back to work, right?
Yeah. Anyways.
Oh, for
Let's
sure.
go on.
Anyway, number
one.
one, we were talking about whether it's a buy or sell the Tesla and Apple stock split event, and you're just gonna have to pat me on the back because I was more right than you.
What do you mean? I was sell.
You
both
said
of
it
them,
was
right?
going to sell. You were already selling Friday, and I said it was first going up before it go down. I said it was
Okay.
going to have a few, at least a couple of
was
days
early.
up. You were early, and I nailed it. And look at
Okay,
this. You wanted to go and do the parade, and I was.
I was like what? Like how many? Like I was slightly.
Did we
early,
not?
Like,
Did we not make a burger bet or something on this last week?
I don't know, but
I think you owe me a burger just because of that.
What do you mean? How many days? Like, let's look. So Friday is
2
what,
days.
the 31st?
That was enough. It was the point was it split and it went up first, and that's all that mattered.
Oh,
win.
I see what you're saying. Yeah. You know what I think happened? I think that there was a few days when it hadn't hit anyone's account because of the reorg, and therefore there was less supply in the market.
It could
Right?
have
Like
been.
think about it. Think about it. If you're sitting there and you own it in your account, a lot of now some people it instantly shows up and they can sell it the next day, but a lot of brokers it doesn't show up, and you're sitting there with the old amount, and it throws your like P&L all wacky and stuff. But so it makes it so you're kind of tied, and you're like retail can't sell it.
You know what made me fall out of my seat? I had a couple of friends that are not in the stock market. I would say that they're one rung below Robin Hooders, because Robin Hooders are actually watching the market, right?
Yep.
And so take it one rung below.
They're Friar Tucks.
They're Friar Tucks. And I got the phone calls on Monday, and they were legitimately believed that they've got an opportunity to buy Apple at 75% discount from where they saw it on Friday. And you know what? The stupid thing is a bunch of these quote machines don't adjust it, and it shows that it's down 75% or something because they don't show the split.
Yeah.
And there were legitimate people out there that believed that this was a monstrous opportunity to buy the dip on it.
Of
And
course it is.
and I wonder how whether they obviously they contributed to the buying, but how much of that was a factor? Was this just I'm just associated with people that don't get it? Maybe that's the case.
Well, no, you have some very sophisticated friends. Yours
I
truly.
do, but I also have some that maybe not so much.
Oh,
But-
we all do, you know. But listen, how much do we know about brain surgery and what they do for a living? Zero.
Yeah,
But that doesn't stop us from giving our opinion about it, though.
especially the doctors that do the brain surgery. No,
Exactly. Thought about using a number 4 scalpel. Anyways, the Patrick, I think that you're being awfully rude to me. The fact that you're saying that I didn't get it. I was 2 days early. You were right, but we were
listen. It's only the magnitude of right, because we were both of consensus what was going to happen, that they were going
I
down.
think the important thing is that we can actually say this was the first time that we were
didn't
both.
Goocher it.
We didn't goocher it. It worked. It's the curse is off. We're good to go. We'll see if it lasts past 2020 though.
Yes.
Because we've actually gotten both a couple right. Like I think we were both like fairly close to the bottom long, and so we've gotten a couple of things right.
All right.
So we are turning the table, and we are becoming less and less. Oh, Patrick, I just realized I screwed up.
What?
We got to go back to the record scratch, and we're going to do talking charts. One of our listeners sent us something about the euro dollar, and I believe his name is Hank, which I remember because I like that name. Hank it just sounds like a guy you want to drink beer with, don't you think?
Sounds good to me.
Yeah. He pointed out that there was a potential prairie dog, and he was wondering whether it was
On
whether
what?
it was the euro dollar.
On
like
on
euro
what
currency,
month?
the currency.
Oh, yes, yes, it is a.
Oh,
Prairie
you
dog.
know this. You saw the prairie dog.
I've been calling the prairie dog to my members anyway.
Nice.
But
I don't know if Hank is your member.
But
or not,
but
or if he came up with-
it's like a double meerkat or whatever. It's
almost
like,
a triple meerkat with like the baby, the mom, and then the dad.
Yeah.
It's almost like the Goldilocks. It's
then it's not even stopping a Fibonacci stuff, so that I can't call out you and Chase for it being a false prairie dog. These are legit prairie dogs. They give back the entire breakout.
Yeah. Anyways, interesting.
No, you know what?
I hate to change topics. I forgot to do it in
that's your because you talked about you talked about your U.S. dollar bull position, which is basically that chart, but just upside down, dude.
Oh, really? That's how it works. Okay,
sorry.
let's do.
I'm sorry to let you know that that's the way it works.
Yeah.
All right. So the top 3 things to watch next week, but we're covering it this week. All right. So number 3, how many days is lumber gonna go limit down? Somebody is stuck holding the bag and they can't get out.
This lumber is hilarious. You pull up the quote, and it's basically, let's just pull it up here. I think it was 639. It was 641.5 offered on the November contract.
That's where we're frozen on the November contract.
And there's like size offered, like just a wall there offered. So we've had 2 days. This thing ticked at 8.25. It's now off almost $200 in a week for absolutely no reason. This thing is hilarious. Listen, it's a great contract, but can you imagine being long this thing and you can't sell it?
Oh, you can't sell it and you're just getting hammered.
You know what's funny is
margin call after margin call.
You read stories about this, and most instruments these days that everyone trades are financial contracts. And they trade, and sure, we have limits, and they stop trading for an hour and stuff like that. But how many contracts, think about it, the S&P just went locked limit down, and you couldn't sell it, and then the next day you got
up.
Well,
it happened in E7, right?
Yeah, but it got locked.
The futures kept trading, right?
Right. But just stop and think about this. You get up, you can't sell it. You're still long. Then you get up the next day thinking, okay, maybe I better take my lumps. But no, it's still locked limit on a new limit down. You still can't sell it. Everyone's lined up to sell. This is hilarious. This is from the 70s.
This is, I remember there were times when treasury bonds would go lock limit, and there were some real cowboy days for this stuff, and it really has in the last decade and a half. It's so rare, and the fact that we're watching this cowboy price action happening right now is pretty epic.
Yeah, it's awesome.
Except if any of our listeners are actually long lumber. Oh, sorry.
Most of them would probably be fading it and then be short. I could kind of see that. Because it was dumb, to be still.
Well, you were doing your little long home builder parade when it was going up, and now you're all the rock star fading it. Whatever.
No, I'm not fading. I don't trade this thing. This is crazy. I don't want to be locked into something that's like this. Although if it keeps going down, I might buy it. I don't know. Hey, listen, put on your Fibonacci's and tell me where I should buy this thing.
Oh, I'm not going to do that. But let's go to number 2. The Bank of Canada and the ECB. We got some monetary policy and press conferences and all sorts of fun stuff coming out next week. Is it anything we should pay attention to?
Well, you should always pay attention to central banks because there's always the possibility that they change, and especially the ECB. They brain dead, just absolutely useless central bank that I have no time for, but you never know when they might smarten up and actually do something intelligent. So watch for it. It's something to watch next week for sure.
Well, number 1, you already ruined it. Thanks for in the talking charts. But the number 1 is, do we buy the dip or is the pain just beginning?
How did I ruin it? I was talking about lumber.
No, we talked about it during talking charts where you were so sure to sell the rallies.
Oh, yeah. Sorry. I did screw up.
No, it's okay.
I missed it.
It's okay, but it's just going to be a little tighter on the thing because Kevin, everyone knows Kevin's selling rallies. Okay.
Yeah.
I will be watching. Now, I want to show you what happened in this market correction over here. Right. And so it was the textbook, 3-4 day sell off. Right. And then the rally was about a 61% retracement on the upside on a Fibonacci, and then it sold for about 6-7 days after that. This, at minimum, I think fits what you're looking for, which is essentially that it's going to bounce, and then you're going to fade it, which I actually think in principle makes a whole lot of sense. Rarely proper and meaningful market corrections, and for let's just rule out a market crash for a moment, because I think there's a legitimate chance this could be a market crash, but let's pretend it's not. Let's pretend it's not.
One second.
First of all, it's not my base case. First of all, like
Okay.
it's an outlier, but I think it legitimately could happen. But it's an outlier. Like I would give it like maybe a 1 in 6 chance that we're gonna have.
Really?
Yeah. But it's to me that's like rolling 6 on a 6-sided dice.
No, yeah.
On
Wait,
balance.
You're good
on
with
balance,
the math. You're good with the math.
On balance.
But 1 second. 1 second. When you say a legitimate crash, are you talking like 30%?
Oh, come on. 30% is think of it this way. A 30% market crash would not even go back to the lows of March, right?
So you think that's a 1 in 6 chance?
I think so, yeah. Oh yeah.
Man. You're grizzly, man.
No, I'm not, because
You're
that's
Kodiak
not my
Brown.
that's
You're
not
Kodiak-
but that's not my base case.
No,
dude.
but
Stop.
even I know I get it, but even saying that's a 1 in 6 chance is grizzly.
All right. Well, my base case is that we go back to this consolidation right here, which is around the 3,000 to 3,200. That I think is a far more probable scenario, and that basically would mean, and that would take in the fashion, I would almost cookie cutter the market correction of 2018, right? And so if you go back to 2018, this entire thing right over here was about a 3-month. It took 86 days, 85 days, and it was about a 21% market correction.
Okay, so what does that look like? 86 days at 21%.
So that would mean that if, and that would take us into the elections, right? And that would mean that that would be an S&P, that exact correction would be a 700 S&P point drop down to just below 3,000, about 2,900. And that would, and 86 days would be taking this out to end of November. That if it just cookie cuttered that one, each one is always unique.
Yeah.
Like but the point is that market corrections tend to, 1 to 3 months, and they give back 10 to 20%. I think that kind of a market correction is the more probable, and it could turn far uglier. Well, think about it. We got COVID and elections and all sorts of other stuff. There's enough reasons why
those are all bullish. Those are all bullish things you're talking about. But anyways, Patrick, I've been arguing that we get 10 to 15%. I don't know the timeline, and I guess what you said makes sense. So we're not that dissimilar. It's that 1 in 6 chance that you think it's going to go down 1,000 points. That
I think you.
I'll take the other side of that.
I think you need to have some left tail risk lottery tickets to kind of help you out. Like, I mean, you don't have to go and build your portfolio planning for it, but why not have something that's going to cash in for something like that?
Sold to you. Okay.
Well, at least I know who's.
That's right. You know who's on the other
who's
side of
selling
your
when
chart.
I'm on the buy. All right, there we go.
Yeah.
All right. So anyway, parting words of wisdom. Why don't you give us a read?
Okay, so it's from your favorite book. Everyone knows who it is. If a man didn't make mistakes, he'd own the world in a month. But if he didn't profit by his mistakes, he wouldn't own a blessed thing. All right, that's a good one, Patrick. I must say, I don't recognize that one, which is unusual. What part of the book is that from? I can't even remember.
I didn't actually find it. Taylor did, but
okay.
Anyway, but
well.
it is a good quote. I mean, think about it. If we could all find a way to be always right, then we would compound ourselves to Elon Musk status.
That's right.
And the truth is that at the same time, if we couldn't profit from some of those mistakes, well, we'd have nothing.
Yeah. If we were able to do that, we would be like Elon Musk, getting high with his girlfriend and our third friend, and trying to convince them to have a threesome, and then tweeting out that you're going to buy the stock at 420. In hindsight, it would have been a great buy. Like he would have, literally, he would have stole it from all the investors. Who would have thunk it? Good for him. World's greatest stock promoter. Anyways, well, that's it for our main show this week. We appreciate you tuning in. We couldn't do this show without you. I'd like to give a big thanks to Michael Batnick from Ritholtz Wealth Management and fan favorite Kuppy, who's always a pleasure to have. If you like what we do over here at Market Huddle, please share it with your friends. You never know. The bigger the following, the better chance we have of maybe getting Elon Musk on our show. What do you think the chances of that are?
Zero,
yeah. Before we get to the after show, here's where you can find us. You can listen to us on the market. You can listen to us, the Market Huddle, on the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get our latest content. Ring the bell or something Lena tells me to do. Follow us on Twitter at The Market Huddle. We're on Twitter every day, and Lena is in charge of that one, so you can give her a big shout out and talk to her that way. And if you could, please rate us and review us on iTunes. It helps us out immensely. Now, usually this is a point where I ask Patrick where they could find you, but we're going to get Lena on the line because she's going to explain to you that we have a new email that we're going to ask you to write in on.
So if any of the listeners have any burning questions they would like answered by Kevin or Patrick, they can write to nostupidquestions@markethuddle.com.
That's right. We are having a new segment that we're going to start next week, which I think is pretty self-evident, the name of the thing. Patrick's going to be in charge of most. Yeah, well, Patrick, if we don't get any stupid questions from the listeners, Patrick's got plenty of them, so we'll be good that way. No, but seriously, a lot of times there's a lot of people. You'd be surprised. Everyone has different levels of expertise. I know that when Charlie McElligot's gamma charts got very popular, that's the Nomura analyst. There was fellows that I knew that were terrific credit analysts that really understood credit like nobody's business and were CFAs and really smart, but they still wanted to phone me up and say, listen, can you explain this to me? Because I'm not sure exactly what's going on. So we all have kind of things that work better at. And one of the ideas about this is to kind of explain things. So in that vein, there are no stupid questions. Patrick's going to answer some of the technical ones, and I'm going to try to do the other ones, and we're going to kind of slosh through it together. And hopefully it'll be a lot of fun. We're looking forward to this new part of it. So Lena, one last time, where can they write to us with those questions?
They can write to nostupidquestions@markethuddle.com.
Great. Thank you very much, Lena. So Patrick, where can they find you?
You can find me at Patrick Ceresna on Twitter, and you can also follow me on my website, bigpicturetrading.com.
And you can follow me.
Where can they find you?
You blew it. I was going to go. But anyways, here we go. I'm at Kevin Muir on Twitter, and you can follow my newsletter at themacrotourist.substack.com. And listen, you can never have too many friends. Bear market, bull market. We're just happy to spend time together on this crazy ride. So thanks for tuning in. Now stick around for the after show. Lena, you there?
Yeah, that was good.
What?
Yeah, that was good. I'm impressed.
She liked the outro.
Or maybe it's
So
the
listen,
8.5
no, she was talking about the beer
that I'm drinking because I didn't realize.
What percentage is it?
It's 8.5.
It's a little boys version though. It's like a little stubby.
Yeah, it's a stubby. So I was like, oh, whatever.
Yeah.
It's a lighter
stubby.
punch or whatever. It should be fine.
So much for a summer drink,
Yeah,
right?
as I'm hearing you guys banter, on top 3 things to watch, I'm like, what the hell is going on? I feel kind of funny. Am I already drunk? And I'm like,
funny.
We usually drink tall boys, so I was like, this is a stubby. Like, I shouldn't feel this way. What is going on? And I had lunch earlier, so it's not like I'm drinking on an empty stomach. And I read it, and I was like, oh, it's 8.5. It's not quite the 11.5 beer that I drank the other week, but it's
actually pretty good for an 8.5 because usually 8.5s you can taste a little bit. It's like you're drinking vodka or whatever, and I can't taste it. I wouldn't have known it was 8.5.
Yeah, this.
Okay, let's
I
get
just
the
assumed it
review
was
of
going to
this
be like
bad boy over
4.5 or something, right?
I agree.
So.
Lena, you're
well.
the guest
Now
here.
that
Go ahead.
now that my opinion of this beer has slightly changed since the alcohol content, I like it a little bit more because it packs a punch. I would probably
Hawaiian
I would
punch.
definitely drink this again for sure. It was definitely refreshing for summer. It has like hint of like pineapple or something. So
It does. I read that.
yeah,
It
I
does.
really like pineapple. So I would give this like an 8.9.
Oh my God.
I was going to
Okay,
give it a good rating, but you blew it. Well,
Okay,
that's
Patrick, what are you going to do? Let's get this over with.
Me?
Yeah.
I was going to give it like an 8.3. Yeah, I like it. I would think, but again,
It's
it
not your
doesn't pass
first
my.
choice.
No, but I also wouldn't buy a 6-pack of it. Like this is one of those. Like
guys-
I'm not going to use that sessionable word. I just used it. There you go. But it's for me. If someone gave this to me, I'd be happy to drink it. But I don't think I would ever buy a 6-pack of it. So I'm going to give it a little bit on the lower spectrum of what I consider a good tasting beer. 8.3.
It tastes more like a cocktail to me.
Okay. So both of you, it's going to your heads. You're obviously high. It's a 4.5 tops. I'm a seller. That's it. You guys are insane.
Oh my god!
I mean,
wait, tell me you at least finished it.
I'm having trouble because it's
what a waste. Send it over.
Oh. I'll finish it though. I'm a good Canadian.
I keep
You don't
shooting
leave
myself
beer.
in the foot
Okay.
because I get drunk by the time we get to the after show, and I'm
Yeah,
feeling
and then
a
you have
little
to do all the
loosey-goosey,
editing.
and then I'm like, wait a minute, I still have work to do.
It's okay.
Oh, no,
we don't make
it's
any
perfect.
mistakes. There's no
That's
editing
right.
for us.
So you guys got
Okay.
any big plans for the long weekend?
Yeah, I'll let you go first, Lena.
Wow. We actually found a place to rent that we were
Nice.
We were kind of house
when are you
hunting for
moving?
the month of August, and it was kind of difficult for many
Yeah.
reasons.
So you were fighting every other millennial trying to
Oh,
escape
there
the city.
were properties that had 8 other offers at the same time. So it's been
Yeah.
pretty competitive, and we actually finally found a place that we really liked, and they accepted us. Thank you. And now I'm gonna have to get packing. So that's kind of where it's at.
Oh
When
no,
do you
that
move?
sounds like a great plan for a long weekend.
When do you move?
We move like the last week of September. So.
Oh, you got tons of time.
Yeah, I like to procrastinate a little bit when it comes to packing, so we'll see how that goes. But yeah, that's what I'll probably be doing this weekend.
And she's coming over to my place for a team barbecue that you weren't invited to.
Why?
What?
Because I'm not a big picture. It's a big picture
Exactly.
team.
Yeah, he's
fine, I
making
don't-
us come to a work function on Labor Day. So let's
God,
let
help
that
me.
sink in for a
But
second.
there's an unlimited amount of booze with great food. And
Yeah, but you got to be around your boss, which sucks.
Exactly, right?
Yeah, exactly.
It's like double-edged sword. I can't win.
Yeah, yeah. Plus, I hear that guy's an asshole.
Yeah, I heard it. I heard that too. Through the grapevine, no one has the balls to say to my face.
So I am. So while you guys are doing that, I will be going up north. My wife wants to go out and experience a little bit of Canadiana, so we are going back up to Northern Ontario to do some hiking.
Whereabouts in Northern Ontario?
I think we're gonna go. When I went with the, so I took the kids and I went canoeing. Remember that?
Yeah.
Did I talk about that?
I think so.
So I took the kids canoeing on the French River, and unfortunately, it was a brutal tornado slash
all
storm
kinds of
that-
weather
what-
stuff.
Yeah, and being out there in a canoe, it's trying to get through all that
That's
stuff. was a little
dangerous.
difficult. Yeah, actually, we were canoeing like we would canoe. We got up one morning and we canoed for a little while, and then I saw it blowing in, and we very quickly, pitched tent again, kind of at 8 o'clock. So we got up at 6, canoed for 2 hours, found a new site, pitched tent, basically went back to sleep, waited for the storm to roll by, and then went again at 2. Like, it was crazy. And then there was tornadoes, and it was just a disaster. Anyways, so we're going back there. So watch for extreme weather as usual. So that's but it's a beautiful area, French River. It's kind of
So wait, you
north,
guys are portaging there? Is that what?
we were when we were doing that, and but this is just we're just going to go hiking.
Oh, I see. Okay.
We're just going to go up for the day.
Nice.
Sounds
If you're ever around there, there's a great French River trading post. It's got the world's greatest fudge
Ooh.
for any Ontario, for every Ontario people. You're up there. It's great. I know that's us Canadians. We're known for our fudge. Which I don't think is the case,
just sounds so wrong for
sounds
some
so
reason.
bad. It does sound wrong, but that's basically like the kids love it, so we're going up there for fudge.
Great. That's a fudging weekend.
I said pardon. So, Lena, have you watched the second Dirty John Betty Broderick story?
No, I'm kind of staying away from Netflix for a while.
Yeah, well, because you finished it.
I
so you're
finished
waiting
it, so I'm
for
just
the-
waiting for Netflix
You finished
to
Netflix.
Yeah,
You
she
just
did.
update
finished-
their content a little bit more,
right.
where it's a little bit
You
more
literally
substantial.
finished Netflix.
Yeah.
I mean, this COVID.
Oh, you should
didn't
watch it.
help,
It's
right?
it's not the greatest. It's got Christian Slater, which I don't know. You're not
Ooh,
old enough to
Christian
remember. Oh, you know-
Slater.
Yeah, he
Hi,
looks
90s
bad.
heartthrob.
Yeah, he looks bad. It's just not good. He had bad plastic surgery and stuff. And what's the other lady's name in it? Jeez, I blew it.
I don't even
Dirty
know. I
John.
haven't watched this. I don't even know who's in it.
It's the lady. What's her name? Let me just.
Where
look.
is she? Where is she
Hang tough.
from?
She is Christian Slater and Amanda Peet.
Oh, I haven't seen her in anything in a while.
Yeah. Actually, I was talking to my wife about it. I was trying to figure out where she got her start. What was her big breakthrough role?
I have no idea.
Yeah.
But maybe
what's this
I've been kind of trying to read a book. It's been a while.
Why are you doing that?
Because I
That's
finished
crazy.
Netflix. I'm waiting for Netflix to update their content.
You're waiting for Netflix to get caught up.
So I gotta, you know.
You know, I'm on the
Talk to myself.
exact opposite of Lena on the spectrum on that. Like, you guys are gonna just make fucking fun of me. It's 2020, and I'm just discovering Community.
Oh my
And I'm just like,
God.
I'm like one episode in. Yeah, I never even knew it existed. Like,
It's good.
why didn't anyone tell me? Like,
It's good.
it's
I like it.
2020.
It's
all right,
good,
like
it's
what has it
good.
been? It's been like 2 decades. Like, how long has this show been out?
Do you know about
I
Parks,
think
Is
Parks
it
and Rec?
older than Friends?
Parks and Rec is better. I like
I like Parks and
better.
Rec much better.
Really?
Yeah.
Yeah. I don't know if I'd say much better. I think Community has some good parts. I think it went downhill when they put Chevy Chase in there. I liked it without Chevy Chase.
Yeah, I think I have
Anyways.
mixed feelings once. It's not that I don't like Chevy Chase. I just
Wasn't
didn't
he
think it
in
was
that from the
right.
beginning?
No, I don't
He
think
was in
so.
at the beginning.
I don't know.
No, I'm watching season 1.
Was he
Like,
really? Was
he
I
there
wrong?
day 1.
Maybe
Oh,
I
maybe
just
I like it
started
better
at, like,
when they
season
got
3 or
rid of him
something.
then.
Yeah.
Maybe I'm the other way. Maybe it's when they got rid of him then.
I know what's going on with Patrick though. He's watching whatever his kids are watching.
Yeah,
That's what's going on.
So watch Parks and Rec because that's a
Yeah,
good one.
Parks and Rec is good. You'll find
Yeah.
a character you can relate to for sure.
Well, of course, there's one that. Wait, listen, we don't even need to say who he's going to relate to.
We'll
He's
leave
gonna
that for
love that guy.
interpretation. We'll leave
He's
that
gonna
up
go
for
and figure. He's gonna go figure out this Ron guy. He's gonna go like Ron's my hero.
Yeah, he's gonna love it. He's like, yeah, that's my guy. Now
That's
you
your
have
guy.
to go watch Parks and Rec, Patrick.
All right.
You got 2 shows. That's the
I'm only going to do one thing at a time. I'm busy enough as it is.
So the good news is that because you're so like not with it, you're finding all these things, and you get like basically 6 seasons to watch.
Yeah.
Oh, yeah. No,
So
that's
there's
the
a
whole point,
plus
is that
side. There's
This
a
is,
plus
that's
side.
what I'm saying. I'm the opposite of Lena. Lena's like, I'm giving Netflix a break because I watched Netflix.
Yeah,
Period.
Netflix,
Yeah,
Crave, you name it, I finished it.
I finished Netflix.
I'm rewatching shows that I've watched many times before. That's why I'm moving on to a
Lena,
book.
do you have Amazon Prime Video or whatever it is?
Oh, that too. I've got everything.
So have you watched the Jim Gaffigan special where he goes and he does because I know you like comedy. Have you watched the one where he goes to each country?
I have mixed feelings actually about him.
Why?
I don't know. Something about him. I don't know if it's his delivery or if it's...
Oh, I like him. The Pale Tourist. Maybe it's just because it's got tourist in its name. It was the first one. He goes to different places, and there's only two episodes up so far. The first one is Canada. And he
Oh, then
makes
now I
fun
have
of
to
it, and
watch
it's
it.
actually really good jokes because they're very inside baseball kind of.
And it's very
jokes about
true?
Canada. Yeah, I thought it was good. And then he goes to he does Spanish, or Spain, sorry.
Okay.
And he performs live in Barcelona. And you know what's interesting is I found out him and his wife write all the jokes. And he's
Oh,
got
his
like
wife
4 or
is
5
in-
kids.
Oh, okay, cool.
And like, listen, he was actually in Lethbridge, and he knew
In
like he was making jokes.
Lethbridge?
Yeah. So like this guy's like I respect him. I think
85%
he's
of
funny.
Canadians have never been to Lethbridge.
Do you know 66% of stats are made up on the spot?
Oh. Okay.
What the hell? Where did you get this? 89%. Of
I'm just
Canadians have
throwing out numbers there, but I know
Yeah,
I lived in Alberta.
She's the 66%.
No, but I lived in Alberta for almost 4 years. I had never gone to Lethbridge.
Whoa! I didn't know this.
Yeah, I lived in
Where did
Calgary
you-
for almost 4 years.
I didn't know this. When were you in Calgary?
I lived there from 2016 to 2010. Oh, 2006
No,
to
that's
2010.
backwards.
Sorry.
Like,
Sorry,
are
the
you-
other way around. 8.5 beers.
Or
a
like,
year.
are you in Inception or
2016
something
down
like
to
that?
No,
2010.
2006 to 2010. That's what I meant. I moved to Vancouver in 2010.
Whoa. Okay. Well, I didn't know this. So you lived in Calgary,
Yeah.
and what? Like, did you grow up here?
Yeah,
Like,
I
are
grew
you
up in
a Torontonian?
Toronto. I grew up in Toronto.
And then what made you go to Calgary?
You know, I was like living
parents.
downtown. I was working downtown, and at the time, I was like, I can't remember how old I was when I moved there, but at the time, I was getting kind of sick of the city. I felt like everything was just repetitive, and I just needed some sort of change. And I was like, I can't just live in Toronto forever, my entire
Yeah.
life. I need to live somewhere else. And at the time, my employer then were expanding their business out west to Western Canada, and they were like, we need somebody that's experienced somewhere in Alberta and also in BC. And I said, I'll go to Alberta for the first few years, and then I'll go to BC after. And
Nice.
that's kind of how it happened. And I lived in Calgary for 3-4 years, and I have to say, Calgary was a really nice experience. I met one of a lot of people
Wonderful
that I met
people.
in
Great city.
Calgary.
Yeah,
Super
wonderful
nice.
people. The
Yeah,
fact that
wonderful
it
people.
snows in August is not no reason to knock it.
It's true though. One of the summers that I had was there. It hailed so badly. The hail pieces were a size of a golf ball. All the cars
Yeah.
were wrecked.
Yeah.
This is like middle of August.
Yeah.
And I could not believe it because I didn't believe people when they were like, "Oh, it can snow in August. It can snow in July." I'm like, "Yeah, right. It's still summer." And
Yeah.
sure
no,
enough,
it snows.
actually
They'll like
does
literally
happen.
get snow.
Yeah.
Yeah. No,
And
it's,
then
it's a
that's-
lovely city.
Yeah, that's
Like,
why I
it's-
said, "Okay, I'm gonna go to Vancouver and peace out."
And then Vancouver, the fact that it rains 100 days in a row in December is not like it.
Because there's 100 days in December, right?
Sorry, no, it's 400 days starting December. It's no reason.
You know
just
what?
to get
The-
seasonal attitude, disorder.
June or May before I left Vancouver to come back to Toronto.
Yep.
From May to June, like for those 2 months, I think it rained every single day except for one day. Every single day it rained except
That's
for one
actually
day.
strange because by then those are usually nice days.
It was absolutely miserable.
I have one of my good
but,
one of my
yeah.
good friends that I was a roommate with him, and he was from Vancouver. And one day it was raining in Toronto, and I was walking like home from the subway, and I saw him just walking around, like staring up at the sky, the buildings and stuff. And I said, "Pat, what are you doing? Like, what's going on?" He says, "Oh, I just miss home." and literally, it was raining, so he decided to go for a walk because it made him feel good. I was like, "Okay, that's what Vancouver's all about."
But I
Anyways.
didn't realize that so many people that's outside of Ontario hated people from Toronto.
Oh yeah, we're absolutely detested.
Every time I told people, "Oh, where are you from?" It's like, "Oh,
Americans
I'm
don't
from Toronto."
care.
They're like,
Canadian.
"Oh,
Yeah, well, 'cause-
Toronto," and I got such a diss about it.
Toronto is not very liked for sure. Like it's and actually my wife's the same way. She grew up here and she didn't realize how much people dislike it. But she would say it's because we are the best. She wouldn't say that.
You know
I'm
what?
just
She
kidding.
is right.
Just kidding.
She's right.
No, listen. I will tell you one thing though that I think, Lena, that people in Toronto don't understand what real Canada is like.
Oh, I 100% agree. I think
They
we're in a bit of a
think
bubble.
that you
in
could
Toronto.
drive somewhere and that because like they've grown up in Toronto, where Southern Ontario is very dense in terms of like driving anywhere.
Yeah, Southern Ontario is like a part of the U.S. Like,
That's right.
Might as well be.
And then a lot of times the people that grew up here went to Buffalo or went to the other way, and they spent all their time going south because it's so far to other parts of Canada
Yep.
that they end up like going. So they go and they just don't understand how the rest of Canada lives. Like I grew up in Winnipeg. Like you drive, 40 minutes out of the city and then you're done. It's like you don't see a soul for another 2 hours.
Yeah.
and people just don't understand that, and it's so they don't really. I almost consider Southern Ontarians, and it's not just Toronto; it's all of Southern Ontario, another breed of people.
Oh yeah, totally, for sure.
Yeah,
100% agree. Like living in
To be
Alberta
hated.
really taught me.
Yeah, I get it.
Breed of people that should be hated.
Well, they're just not. They're just not as Canadian as the rest of them. They're just not as likely to.
You know what?
They'll complain when it gets
I need
cold
another beer to keep
on
this
the outside.
conversation.
Yeah, well, we should probably get it. I probably
we
insulted
should
enough
get
people
going.
that I probably should stop.
I have work to do after this.
Yeah. Okay. Well, anyways, it's a great show. Everyone, one last
Happy
reminder.
Labor Day.
Yeah, happy Labor Day. One last reminder. Send us your questions. We need some questions for No Question is Too Stupid. Lena, tell us again the email address.
nostupidquestions@markethuddle.com.
Nice.
Great. Have a great weekend, everyone.
All right.
Have a
Thanks,
great
everyone.
weekend.